Hello and welcome to another session of the My Solo 401k Financial YouTube and LinkedIn webinar series. We're just waiting for the viewers to join and we'll be getting started here momentarily. Going to just also check our audio. Again, we're just checking the audio. Okay, it seems to be working. So we'll go ahead and get started. Start out with some housekeeping, and then we'll start to go through the slides that we wanted to share. If you're watching on YouTube, you can ask comments in the comment box. You can also please like this video and subscribe for more videos like this. Start up with the standard housekeeping. The presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So we want to highlight some of the resources. We do have our community where we host webinars every day, live Zoom webinars, Zoom style webinars like this, where you can come and ask questions, you can hear the content. For example, tomorrow we'll be on our community, mysolo401k.net/my-community. Chat that link over. And we'll be talking about cryptocurrency and why security is the #1 advantage of a crypto solo 401k versus a crypto IRA. We also have forums where you can post questions. We have people posting questions, throughout the day. You can see what other people are asking. You can post your own question. So it's a great place to come and share the knowledge and learn from others. So today's focus is using a 401k or IRA to buy a business. We want to start out by talking about the ROBS 401k basics, go through some of the top compliance rules and considerations, as well as share some frequently asked questions and our responses to those questions. So first off, with the basics, a rollover as business startup transaction, or what they call a ROBS, ROBS, will allow you to use retirement money to start or buy a business without incurring taxes or penalties. So some of the key ROBS requirements is that you have to use money that you're able to roll over to the new 401k plan. So specifically, that means money that's in a former employer plan or a non-Roth IRA. The funds can be used to start or buy an active business. So typically that means a business that's providing goods or services. You need to operate the business as a corporation that's taxed as a C corporation. The person that's using retirement money has to be a bona fide employee. So for example, working 1,000 hours or more per year. The steps in the process are first to set up a corporation, so incorporate. That entity would then sponsor a new 401k plan. You would roll your money into that new 401k plan, and the plan will allow you to invest in the stock of the business. So the money never is a taxable distribution because it goes from one retirement account to another retirement account, and then it's not distributed, instead it's invested. So that's why it's not a distribution that's taxable. It's an investment in the stock of your new employer inside the 401k. The business can then use the proceeds of that investment for any type of legitimate business purpose, including buying a business. So now let's go through some of the top compliance considerations. So the business that's funded with your retirement money needs to be a C corporation. There's no exceptions. You cannot operate as an S or a partnership. The entity needs to be an active operating company, which again, the way that that's typically done is by providing goods and or services. Now, the corporation may have subsidiaries, so that you could have, for example, 100% subsidiary LLC for different lines of business. So you do have flexibility in that regard, but everything needs to be under that C corporation umbrella. If you have money in a Roth IRA, that is not eligible. And the reason for that is that money in a Roth IRA cannot be transferred to any type of 401k, including a ROBS 401k. So it would have to be pre-tax or traditional money if it's in an IRA. Now, you can transfer Roth money from a former employer plan. So it could be, for example, a former employer 401k. More and more folks have Roth money in their W-2 day job sponsored 401k plan. So if that's a former employer plan, you could roll that money over. It would need to go into a separate sub account. So there would be two accounts for the ROBS 401k. One to hold your pre-tax money and a second to hold your Roth money. Again, you can generally only use funds in a former employer plan. So while there are some exceptions that will allow you to transfer money from your current 401k, typically, and you can check with your administrator, the administrator of your plan, just call the number on your statement if you are looking to transfer money from a current employer plan. But what they'll probably tell you is that you have to first leave your job, because typically you can only roll over funds from an employer plan once you're no longer employed, what they call separated from service, or if you're 59 and a half years of age or older. Now, the fee that would be charged to set up the ROBS 401k, so for example, our fee, it can't be paid with retirement money, either directly or indirectly. So that means that the C corporation, once it's been funded with the retirement money, once you've invested it from your 401k into the stock of the corporation, that entity can't reimburse you. It can't pay off a credit card that you use to pay the fee. Instead, you will receive stock personally in exchange for incurring this expense, because you really incurred a reasonable business expense, the expense of setting up a 401k plan for your new business. And in that case, you would want to coordinate with your tax advisor to report it as a business expense. You must be a W-2 employee. Like we talked about at the outset, one of the fundamental requirements is that you need to be a bona fide employee, because you're rolling money into this 401k plan, which presupposes that you need to be a participant in that 401k plan. So 401k plans are for employees. They're not for contractors, right? So that doesn't mean that you have to start receiving a salary right away, right? Because even people who don't receive salary, even employees, being employee doesn't require that you receive a salary. But once you do receive salary, it would have to be reasonable, and it would have to be paid to you as W-2 wages. Now, once the company's set up and funded with the retirement money, all the income and expenses must flow in and out of that C corporation account. The C corporation is going to have to file a C corporation tax return, for example, an 1120 at the federal level. Again, you are a W-2 employee, so once money's coming in to justify your reasonable salary, reasonable compensation may be paid to you. In that case, it would be paid as W-2 wages. And then if the company has after-tax profits and it chooses to distribute those profits to the owners, those profits would have to be distributed to the owners in accordance with the ownership percentages. So for this ROBS funded business, you again are going to own a significant portion of the stock through your 401k account based on the money from the rollover that you invested. And then you'll own some of it outside of the 401k. And maybe there are other owners, depending on the situation, if you have other investors that bought stock as well. But the profits, again, would be distributed to the owners in accordance with the ownership percentages. So that means the 401k for your benefit, and then you personally. Again, if the company has after-tax profits and chooses to distribute those. Your compensation must be reasonable. So first off, you need to wait to receive compensation until the company is generating income to justify it. So in a situation where you're using the money to buy a business, that may be very soon because presumably you're buying a business that's already generating income. Once that money's flowing through the C corporation, then you may begin to receive reasonable compensation. So reasonable compensation would be the standard in terms of what's reasonable is what the company would have to pay someone else to do the work that you are doing for the company. And again, that would be reported as W-2 wages. So you'd want to coordinate that with your tax advisor. So this company that's funded with your retirement money is free to go out there and obtain a loan, whether it's an SBA loan or a commercial loan. Of course, the loan would need to be in the name of the C corporation. And the bank or the lender is very likely going to want to require that you personally guarantee the loan. So you, as the president, say, of the company, as one of the stockholders of the company, certainly may personally guarantee that loan. But you'd want to be careful not to sign anything that indicates that the 401k is guaranteeing the loan, either directly because it's specific, the guarantee specifically calls out the 401k, or indirectly if it mentions the stockholders, because that would implicitly include the 401k. Because remember, the way that you funded the business was by rolling the money over to the 401k and then buying stock through your 401k account. So technically the 401k is one of the stockholders. So next, the ROBS funded business is not allowed to do business with another business that you own or that's owned by a disqualified person, say a spouse. In other words, the ROBS C corporation can't interact directly or indirectly with another business that you own. So that's one of the top compliance considerations. So we've got a few quick hitters here. Money that's in an inherited IRA, like say you inherited funds from a parent, you're not eligible to roll that over to a ROBS 401k. The one exception would be if you inherited the money from a spouse. You're not allowed to personally loan money to the C corporation. So if you put additional funds in from your personal savings, say, that would count as part of your personal investment for which you will receive stock in the company personally. The ROBS C corporation can't own an S corporation. So if you're looking to use the ROBS 401k to fund the purchase of a business and you want to purchase that business as a stock purchase, if that business that you want to buy is an S corporation, the S corporation status would have to be revoked at least no later than the date of the purchase, because that means that you would have a C corporation, which is the entity that's funded with your business, it's funded with your retirement money, buying the stock of another entity, the target business, and a C corporation is not allowed to own an S corporation under those S corporation rules. Lastly, as far as the quick hitters in terms of the name of the business, right? If you go back to the initial steps, the first step is to incorporate. So that means filing articles of incorporation with the Secretary of State. On the articles, the name of the entity needs to be listed. So at that point, you haven't bought the business. And so you can't form that corporation under the name of the business that you want to buy, because the Secretary of State will see that that name is already taken and would reject the filing of the articles. So you'd have to choose a different name. And then you could work with your tax or legal advisors to make sure that the seller is obligated to do all the steps that are required, say as a post-closing item, to transfer the name, right? Whether that's changing the name from the target entity to the new entity, the buying entity, the one that's funded with your retirement money, or transferring it as a DBA, however you do it, you'd want to work with your legal advisor because they should be familiar with the local requirements in your state to transfer the name. Okay, so now let's turn to some frequently asked questions for those folks that are looking to use their retirement money to buy a business. So first off, the question that was presented, I'm using your 401k business financing plan to purchase the assets of an existing online marketing firm. with a good reputation in the industry. It is very important that I can use the name of the existing business. Should the new ROBS C corporation be registered under the name of the business that I'm buying? So the answer here is that while the C corporation won't be able to be registered under the name of the existing business, per what we were just talking about, how when you go to file the articles with the Secretary of State, the Secretary of State's going to see that that name's already registered under the business that you want to buy. You can work with your business, tax, or legal advisors to ensure that the seller is obligated to take all the steps to transfer the name as part of the sale. So for example, the ROBS C corporation could later change its name or adopt the name of the business that's being bought as a DBA. Next question. I'm using a ROBS 401k business financing plan to fund the asset purchase of a business from an unrelated person. Will my new C corporation take over the EIN of the existing target? So the EIN number of the business that you want to buy is tied to the entity. And so if you're buying the assets of the business, you're not buying the entity, you're buying the underlying assets, which in our experience is typically how it's done, because there's a concern of litigation risk, right? You don't want to, quote, buy a lawsuit. So if the business purchase is done as an asset sale, the EIN is not going to be included with the assets that are acquired because, again, it's associated with the entity and it's not an entity purchase. It's not a stock purchase. So practically speaking, when a business buys another business, the EIN of the new business needs to be updated throughout the business operation. So you're going to have the new bank account, new merchant account down the line. Next frequently asked question. I understand that a bank account will be open for the C corporation. Will you open the bank account for me? Can I use the bank of my choosing? So once the C corporation is established, we will provide you what is needed to open a business bank account under the name and EIN of the C corporation. So then you can then open the account at the bank of your choice. Next question, can I be reimbursed by the corporation if I pay for first month's lease with personal funds? So any reasonable startup business expenses, like paying the first month's rent that you incur with your personal money, again, is going to be part of that personal investment that you make. So you can't be reimbursed. Instead, you will get stock in the company. So if you invested 90,000 from the rollover, 90,000 shares, say, are issued to the 401k for your benefit. If you invest 10,000 by paying reasonable expenses or just depositing cash into the business bank account, then you get, say, 10,000 shares issued to you personally. Now, going forward, it's going to be a good practice for all businesses, even those that are not funded with retirement money, to pay for business expenses from the business account rather than using personal funds. Of course, it is acceptable for the corporation to reimburse you for, legitimate and reasonable business expenses that are of the type that would be reimbursed for any employee, right? Like you're at a business lunch and you use a personal card to pay for the business lunch and you submit an expense report to the corporation. But as a general practice, the business expenses are paid from the business account. Next question is about holding real estate in a separate LLC. I want to use a ROBS 401k to buy a car wash business, including buying the real estate that will be used to operate the business. My attorney advised me that I should hold the real estate in a separate entity for liability purposes. Can I do that? Yes, provided that the real estate is held in an LLC that is a subsidiary of the C corporation. So again, we talked about how everything has to be at least under that C corporation umbrella. So the corporation is allowed to have subsidiaries, but those would be 100% subsidiaries of the corporation, like a single member LLC where the sole member is the corporation. And so that means that that entity, that subsidiary, can't be taxed as an S corp, because we talked about how an S corp can't be owned by a C corp. Now, one thing to note here, because there are so many of our clients that are using the 401k business financing plan in conjunction with an SBA loan, so using that ROBS 401k effectively as a down payment, is that the SBA rules are going to require that for a borrower, so the C corporation that's funded via our rollover as business startup or ROBS 401k, that borrower has to own the real estate and operate the business in the same entity. So while the 401k rules would allow you to have the real estate in a separate subsidiary LLC, provided it's 100% sub, if that same borrower is looking to also obtain an SBA loan, the SBA rules, and a lot of SBA bankers in our experience are not familiar with this very technical rule, are going to require that the real estate and the business is all the one and the same entity, meaning the C Corp. Do I need to hire a CPA? I'm planning on using your 401k business financing plan to fund a franchise purchase. I've always done my personal income taxes on my own, lately using TurboTax. Will I need to hire a CPA to manage the business taxes? So in order to satisfy the 401k business financing rules, the business must be operated as a C corporation, right? Like we talked about from the outset, that's one of the fundamental requirements. So for example, filing the 1120 at the federal level. So as such, our clients find it essential to work with a CPA or other tax advisor to handle the business tax returns, so you can focus on running the business. What happens if my deal falls through? I'm looking to use the ROBS 401k business financing plan to finance the purchase of an existing wine shop. This deal might fall through, and now I'm looking to buy a chocolate shop. Is that okay? So yes, it is certainly acceptable from a ROBS 401k business financing perspective if the C corporation that's funded with your retirement money decides to start or buy a different business, right? As long as you're buying a different business from an unrelated person, right? You can't buy it from yourself. Or if you're starting a business that it's an operating company, right? It's providing goods or services. Certainly a chocolate shop would satisfy that requirement. Next question is about buying a truck for a business. I'm using a ROBS 401k to buy an RV towing business. I need to purchase a new truck with a larger towing capacity. Can I lease the vehicle in my own name and then transfer the vehicle to the C corporation later? So no, you can't transfer a vehicle that you own personally and which vehicle is subject to financing because you leased it to the C corporation that is funded with your retirement money. Instead, the C corporation, the ROBS C corporation that's going to be funded with your retirement money would need to buy or lease the vehicle in the name of the C corporation. Next question, can I loan funds to the ROBS C corporation? I previously funded a business acquisition via a ROBS 401k. I need an additional $50,000 to cover operating expenses. Can I lend these funds to the C corporation? So the answer is no. If you invest additional personal funds in the business, it must be structured as an additional stock purchase at fair market value at the time of the subsequent stock purchase. So again, no personal loans to the C corporation. That was one of our quick hitters under the top compliance considerations. So that takes us to the end of the FAQs that we have. Thank you so much for watching today's video. We would encourage you to continue to engage with us. For example, you can call us at 1-800-489-7571. You can email us at business@mysolo401k.net. You can participate in our community. It's, all are welcome. It's free to join. We have forums. You can see what other folks are asking. You can ask your own question. You can go to one of our daily webinars. So for example, tomorrow we'll be talking about the advantage, we'll be talking about why security is the #1 advantage of a crypto solo 401k over a crypto IRA. So again, thank you so much, and all the best. Take care.